Hey, what's up everyone? Welcome into the channel. My name is Brent with Investing on the Go. Today, we're continuing our series of No 8 to 5, living from our brokerage series using Robinhood. Today is going to be week 25 of the update for 2026. Now I have 5 areas to cover today. Number 1, we're going to go ahead and hit up the market update. Number 2, we'll go over some of our buys and sells. Number 3, we had a humongous amount of dividends coming this week, so stick around for the dividends. Number 4, we're going to take a look at how our buys this week affected our overall portfolio, the performance in there, the dividends that were paid out, and then go over our income breakdown. Then Number 5, we'll jump into our Robinhood dashboard, take a look at our portfolio performance over on Thursday, the weekly performance, where we're at with margin going forward, and some of the pay down that we've done, and our plan going forward for margin. So, with that said, if you guys are brand new here to the channel, I would really appreciate if you go down below, smash that subscribe, smash that thumbs up, check out the pinned comment to get some bonuses and goodies, and drop me a comment down below. Did you guys buy, sell, continue to dollar cost average in the market? Let me know down in the comment section below. With that said, let's go ahead and jump into our market update. Now, every day I post over on Instagram what's kind of going on the daily. Brent.investing over on Instagram. So if there's a change going on with the war, I'll go ahead and post it as well as some other little miscellaneous updates that I like to kind of post. On my adventures, I'll take some screenshots here and then do an overlay of some financial tips, right? So some of the main highlights this week from the market. Number 1, the war ended officially on the 14th of June, but the main issue for us going to war supposedly was a nuclear material. That hasn't really been addressed. I kind of put some information in there. Iran will continue to hold their enriched uranium, but they're going to keep it at 60%, and they promise not to enrich it any further. They're going to use it for energy is the word. Israel and Lebanon still going back and forth, but I saw some news as of recording this video here today on Friday that there's another ceasefire. The Fed decision on Wednesday came out. Hey, rates aren't going to cut. They're not going to increase. They're going to keep it as is, which was already expected. While inflation is at 4.2%, we did see groceries are up over 30% since back in 2015. Rent's up a ginormous amount. I know if we took a look at the history of rent since back 2018, I know one of my units, I started it off about $1,000 on rent. As of this year, I was renting it out for $1,550. So the stats there, 48% rent increase over that almost 8-year time period. Very accurate. Gas prices are up 45%, but they are coming down slightly, right? I went out, got some gas the other day. It was $4.28 versus a few weeks ago it was $4.99. So things are still pretty dang expensive. The last update as of Thursday was that they were planning to go do some signing in Switzerland, but it was all postponed. JD Vance stayed home. The Switzerland got all postponed, and the White House has blamed logistical issues as being the reason behind it. And we can still see, as of yesterday, there was that conflict between Israel and Lebanon kind of going on, and a few other highlights I went ahead and put in there. So that's kind of what's the highlights of the market. In terms of what went on this week, overall, very positive. We can see here, let's go last 5 days here. And here is last Friday. We're kind of rolling into the weekend, and then we got that big news over the weekend that the deal had officially kind of gone through and finalized on Sunday. We saw that huge gap up on Monday. So from Friday close to the gap up on Monday was up 1.37%. We did see throughout the rest of the week with the Fed kind of rolling in on Wednesday and the uncertainty of the deal, like the actual things within the deal, not quite finalized yet. We did see that on Wednesday, the market, as it sold off, really sold off quickly after the Fed came out and basically refilled the gap that we had between Friday and Monday. And then Thursday had a pretty good recovery, ending the week positive for the week. That's the main thing there is overall, we started high, kind of went down, retraced to where we closed on Friday, but ended up pretty positive on the week in general. That's kind of like the market recap there. If you guys have any comments or questions, definitely drop them down below. If you guys have other information out there that you'd like to share, also drop it below. Now, going into our weekly buys and sells, this is exciting. So let's jump into our buys and sells. We had one buy this week, and this was on Wednesday. So Wednesday, June 17th at 12:53 p.m. So 12:53 on Wednesday. What was going on? Well, the Fed came out at 11 and started doing their chatter. And what happened on Thursday after the Fed came out right here? We can see right here, 11 o'clock, the Fed came out, started talking. The market sold off, tried to have a little bit of a recovery, then just sold off right to those lows. Now, if we see down here, the market at 12:50 in this time frame right here, essentially bottom of the week and then had that recovery. So that's when I put in my buy order here. I did 18 shares of TDAC. That's the NASDAQ equivalent of the Tap Alpha fund here. I purchased it at 27.68. And if we go on, scroll on right through here, we can kind of see right in here, I did my purchase at 12.52. I purchased at 27.68. And then as of close on Thursday at 28.31, we're up roughly 2.25 on that specific purchase. Now, next week, anything can happen over this 3-day weekend. The markets are closed. The deal can come, unravel. Things can get a little bit messy, but we'll see, right? There's a lot of optimism and hope out there in the market. So hopium is kind of driving this market higher, and just kind of certainty and uncertainty is kind of like mixed bag at the moment. But overall, pretty happy with those buys that took place on Wednesday, where I was able to get in and kind of hold and continue to hold throughout that week. So that was it. No other purchase, right? I did see quite a bit of people dollar cost averaging early on in the week. I had mentioned in the Discord server, I'm going to wait till the Fed comes out. I see some uncertainty going out there with the deal that's going on. I knew the Fed was going to be coming out. This is Walsh's very first discussion and Fed chatter. So that was going to have some volatility. So I just kind of waited, and it did work out for me in this case, right? I was able to buy in at essentially last week's lows, or Friday's lows, and this week's lows. So it all worked out well. Okay, so that is our buys and sells. Let's go ahead and go into our dividend update now, number 3. So dividends this week was awesome. So very first dividend that rolled into our account, we had the NEOS Gold High Income ETF. This is ticker symbol IAUI. Based on our 280 shares, it paid out 0.5129 per share for a total paid out amount of $143.61. So that's dividend number 1. Next up, the next one that paid out, again from NEOS, we had the NEOS Bitcoin High Income ETF, ticker symbol BTCI. We have 300 shares of this one. It paid out roughly 0.6525 per share for a grand total of $195.75. So that's 2 dividends so far. Next up, we had IWMI. This is the, once again, NEOS Russell 2000 High Income ETF. We have 2,097 shares that paid out 0.6277 per share for a grand total there of $1,316.29. So that was our third dividend payout this week. And we have one more. So we got paid out 4 times this week. And then we had the massive payout here from the Tap Alpha Innovation 100, ticker symbol TDAQ, TDAQ. Based on our number of shares here of 6,308, it paid out roughly 0.3955. It's actually different, right? When I went to the website and looked at it, it's actually a 6-digit number here. So if you were to take 6,308 and times that by 0.3955, it would actually come out a little bit more than this. And that kind of threw my math off there. So I had to go to the website, be like, okay, why is this off? This actually had about 6 digits out here. And when you multiply that together, that was more accurate. So it paid us out $2,494.62. So a good chunk right there. So you add all those up, as well as some cash back. I did have some cash back I kicked back into the account this week. I had $25.44 and $4.12 that I had in cash back that I just kind of kicked back over into the individual account. And we can see here, IAUI paid out 143.61. Let me go ahead and make these old dollar signs. So IAUI 143.61, BTCI 195.75, IWMI $1,316.29, and then TDAC $2,494.62, plus our cashback of $29.56 gives us a whopping dividends this week, or cash back into the individual account this week, of $4,179.83. So massive amount of dividends getting kicked back into our account. But let's go ahead and head this way. So how did those buys affect our portfolio? Let's jump into the dividend portfolio and income breakdown. So jumping in here. Okay, so as of this week on the 17th of June, we picked up TDAC. I count these as my margin shares. I may end up changing how I monitor and track these going forward, but as of now, I'm leaving these as they are because when I purchased these 18 shares, I did buy them in margin. I don't have like cash in the account, so I just kind of add them to my old shares. So my old shares was 2,147 of my TDAC or margin positions. I bought 18 additional shares on margin. That brought up my shares to 2,165. That increased that income from 820.15 to 827.03. That's a monthly difference there of $6.88. Multiply that by 12. That's a yearly difference there of $82.51. And we can see our monthly income increased from $61.81 to $61.88. That $6.88 difference. Our yearly income went up from $74,174 to $74,257. So an $82 difference right there. So overall, pretty happy here. In terms of our portfolio, we can see here, overall price-wise, we're still net positive. We have been brought down quite a bit from our gold position. Gold took a huge hammering when the Fed announcement came out. Even prior to that, gold had been falling. At one point, I was considering selling IAUI, which was essentially positive in the portfolio, and taking the capital and rolling it into BTCI, but BTCI has also taken a beating during that time frame. This is one of the lowest points that it's been in the portfolio. You can see here we invested roughly $15,429 into it. It's valued right now at $8,601. So these positions alone massively down in the portfolio. Even when we picked up T-SPY and TDAC a few weeks ago at essentially all-time highs, they're only down a smidge. And if we take the dividends that were paid out from those positions, we're down even less. So with all the dividends that we've received from our portfolio, we're still net positive 5.31%. We've made about $23,916 in dividends. Not all of that was used towards our expenses. A good chunk of that, right? We pay down our mortgage, we pay down our credit card bill, we pay down the car, and then we have excess amount that gets rolled into our portfolio to buy back more shares, as we've been doing in the past. So everything is still working as intended. Moving forward from here on forward, right? So that's number 4. Now, number 5, our Robinhood live portfolio breakdown. So for this, I do want to go ahead and jump into the portfolio. We'll take a look at where we're at as of now. Let's go ahead and zoom in a bit. And on Thursday, that was the last day of the week, we had a pretty positive day. We went up 2.45% on the day. Thursday overall just kind of boiled up from the Fed making their announcement on Wednesday. We started pretty low. We did gap up on, throughout the after hours on Wednesday going into Thursday. So we already started up pretty positive, and then we just continued to move higher. And then we did see the S&P 500 at end of day on Friday. We look at the 1 day right in here. Just looking at the 1 day, we can see here from top to bottom, right? Thursday, they had a high here of 748 on SPY, and they kind of sold off from around 10:18 in the morning all the way down to about 13. So about 2 hours, so just a bit of a sell-off where the market sold about 0.39%. At 12:13, the market recovered nearly 0.41. It actually broke to those daily highs and then sold off at the very last minute of the day. It sold off around 0.22%, but still ended very positively overall from where we purchased on Wednesday to where we closed on Thursday. So that is the daily performance. We can see all the daily stuff over here as well. IAUI, that's gold, continuing to get beat down there on Thursday. Bitcoin continuing to get beat down, down 2.25 there on Thursday. In terms of the weekly performance here, over the past week, we're up 0.89%. So this takes into account the dividends that were paid out into our portfolio. So the price was adjusted down for TDAC, IWMI, IAUI, BTCI. So 4 of our positions were adjusted down in price. So that brought our overall performance this week to 0.89. So I'm still going to consider that a pretty positive week. And then we can see our portfolio sitting at 359,168. And we're still quite a bit away from the all-time high. Not too far away, right? 362 is the all-time high. And we've added more shares since then, right? During that dip that we had a few weeks ago or the other week, we added about $10,000 of capital, buying back more shares and buying up some additional shares. And then recently we added some more shares here as well. So when the market does recover to the existing all-time highs and we either move beyond it or above it, right? When we go to it or above it, we should recover beyond where we were previously at these other highs. Now, next thing I want to talk about is margin. Margin in here is going to be interesting. I've kind of been changing how I want to use margin, how I want to monitor margin, and use the dividends that gets paid out from margin. So our margin buffer is at 65.76%. My portfolio would have to fall roughly 35% to even be close to having any issues in terms of being margin called. So I want to keep my margin buffer above 60%. So right now we're above that by 5.76%, and I feel comfortable in here. We're using $132,038 of margin as of now. So I do have a tab in here. I'm going to be updating this tab in the future going forward. But between last week and this week, I wanted to kind of discuss a little bit in terms of the margin buffer and how it adjusts and how the margin used adjusts down with dividends get paid out into the account and all of that, right? So last week we could see, this is last week's little snapshot right in here that I took a picture of. So last week we were sitting at $135,719 of margin, or roughly 27.86 of our portfolio. And as of this week, so here's where our margin started off last week, that 135,719. We had the TDAC buy that we did this week. That was all in margin. So I added that value to the margin, which did increase our margin up a bit early on in the week. But then we had the cashback of $25.44, the $4.12 of cashback. We got the TDAC dividend, the BTCI dividend, the IWMI dividend, and the IAUI dividend. So all of that in total, that lowered our margin used by $4,179.83. So that brought down our margin from 135,719 to 132,3836. So that's accurate. So I want to continue to monitor my margin level, my margin buffer. I did in the past say that I want to track the shares that I purchase with margin differently than the shares that I purchase without margin. But what I'm thinking of doing here is, as long as I keep my margin buffer above 60%, I'll continue to invest. And at the end of the month, after I've paid off the margin interest and I take a snapshot of the margin buffer at the end of the month. So I'm going to be monitoring my margin throughout the month. And then at the very end of the month, I need capital from my margin account to be pushed over to my cash account. This is going to be used to pay down my mortgage, to pay down the credit card, and then those things all happen before the 5th. My mortgage is paid out usually on the 1st. My Credit card is paid out by the 5th, and my car payment is by the 8th. So by the 8th of the month, I have a specific amount of capital that I know will have to be withdrawn. I'll move a specific amount to pay down the mortgage, a specific amount to pay down the car, because that gets directly withdrawn, and then I will pay down the credit card down to 0. So of this $4,179 that was paid out this week, I also was paid out by T-Spy earlier this month, and that was already moved over to the cash account. But I don't think I'm going to be moving all of the capital over to the cash account. Instead, what I'm going to be doing here is only moving a portion of the capital over to the cash account that I will be needing to pay down the mortgage and the car, and then whatever is needed to pay down the credit card back down to 0. Those are the only bills that affect the actual cash in the account. So as long as I have enough capital in the account to cover the mortgage and the car, and then move the specific amount over to cover the credit card and reset it back to 0, I can leave all the other capital in this account, working towards that margin buffer, keeping it in line, and then continue to dollar cost average with the margin as long as it's above 60%. The moment that my margin dips below 60%, then I'm not going to be adding more margin into the market, right? I'll still move capital as needed to pay down my bills and expenses, but I'll slow down my investments in terms of buying shares with margin, and I'll let that margin buffer beef up a bit above 60% before using any additional margin at the moment, right? I'm unsure of what I want to do or what goals I want to use with the margin, but I'm enjoying it right now. And the way that the dividends roll in from the margin dividends, we'll say, help keep the margin used in check. It pays down that margin. It helps to pay down the cost, the daily cost of using margin, and then any excess that I have left over just goes towards paying down that margin buffer, and it kind of amplifies the overall positiveness of the portfolio with the dividends. Even if the market pulls back, in the next week or 2 weeks or 3 weeks, with the capital rolling into the account, we'll just pay down a good buffer of that margin. So that's kind of it. I don't know if there's any other questions out there at the time with margin. I'm still planning on fine-tuning my dashboard out to use with margin. There's a couple of things down here that I want to create inside of this, and maybe take pieces of this and move it into a dashboard, like a web interface dashboard that's created with Claude or Gemini that is a little bit easier to navigate with and kind of showcase here during these videos instead of looking at the spreadsheet, because I'm sure looking at the spreadsheet is probably a little bit boring versus some web interface being a little bit more smooth and slick. So guys, that is going to be it for today's video. If there's any questions or comments that you guys had during the video or now, drop them down in the comment section below. Otherwise, I do appreciate everyone tuning in and hanging out to the end with me. Again, go down below, smash that subscribe, smash that thumbs up to join the journey, and I will catch you guys in the next one. Bye-bye.